Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, November the 24th. The year's 2020. Let's talk trading. Learning is changing. But before we get started, just a reminder, these videos are for educational purposes only. Your results may differ from mine. I read something the other day, and they said to learn is to change. So learning is changing. Now, what does it mean to learn? Acquire knowledge, acquire skill, possibly do something different than before. So when you think about trading, you're learning trading. First, you didn't know anything about it, so you acquired some knowledge. Then maybe you started to acquire some skills. And then maybe something came along that you were doing, and then it's like, no, you can't do it that way. That's not working. So you learned something didn't work, and you learned what did work. And one of the reasons why I bring this up, and I can't help but laugh because it happens so often. I see it in emails to me, I see it on the trading forums, the Facebook group. Somebody wants to learn something, and rather than start with a blank slate or blank chart, they bring along something from previous lessons, methods, teachers. How many times do I see a rat zone or a buy zone or a wick zone, and they've got squiggly line indicators on it? Even recently, and the person, if they're watching this video, they know I'm busting them. They were doing the wall mall, and they had squiggly lines on it. There are no squiggly lines to the wall mall method. They're not needed. So the question is, are you really trying to learn? Because learning is changing. And if it means to learn something new might mean to let go of something old. And if you're not willing to let go of something old, you're not going to learn. I mean, it's that simple. When you start out, you come to the wall mall method, you never heard of it before, you're brand new to it. Don't be dragging along other crap, other indicators. No, start with a clean chart, put on the indicators for the wall mall method, and learn it. Because if you keep relying on some squiggly line indicators, then you're not learning the wall mall method. You're not changing. Now, after you learn the wall mall method, maybe, just maybe, you decide it's not for you. Maybe, just maybe, you decide to go back to your squiggly lines. Or maybe, just maybe, you decide to leave those squiggly lines in the past and embrace the wall mall method in total because it's working for you. Once again, these videos are for educational purposes only, and your results may differ from mine. But it doesn't have to be the wall mall method. It could be any other method from somebody else. The fact is, if you're not willing to leave behind what you've learned and learn the new stuff, then you're not going to learn because you're not changing. You're not going to learn. And I know there's probably some people out there listening to this might think otherwise, and that's okay. You feel free to think however you want, whatever you want. But there's just certain facts, call it a cold, hard truth, maybe, but learning is changing. And the thing is, it doesn't necessarily mean what you were doing was wrong, but maybe there's something that's just a little bit better. I mean, personal example, how do you hang your toilet paper? Does it go over the back or over the top? Come out the front? Well, I grew up thinking it was supposed to go over the back. Then I worked for a hotel company and they put it over the front because it said it's much easier to get the paper off the roll. And it's like, guess what? They were right. And then lo and behold, somebody found the patent, and that's the way the thing was designed in the first place. It comes over the top, it doesn't go back behind. It's just that simple. But in order for me to learn it, I had to change. I had to change the way I put toilet paper on. You might think that's simple or frivolous or something, but it illustrates something where you can hold on to a belief so tightly, thinking that you're right. This is the right way to hang the toilet paper. And you could be totally wrong. The earth is flat, right? I mean, if you go far enough, you fall off the edge, right? That's what some people used to believe. But, we've proven that one wrong. So you can see you can be wrong about big stuff, you can be wrong about little stuff, you can be wrong about stuff in between. You're never going to discover it unless you're willing to change. Okay, I think I've beaten that dead horse, right? But one of the things you're going to have to change if you're not doing it now, and that's employ your risk or employ risk management to every trade so you don't lose any more in any one particular trade than you're willing to lose. Make sure your position size is right. And people, I still get questions. Where should I put my stop loss? What should my position size be? You have to do this first. You have to decide the risk. And then if you're going to move your stop loss, then you change your position size. If you're going to keep your position size the same and then your risk is the same, then your stop loss is always going to be the same, whether it's 5 pips, 10 pips, 1 pip, whatever. Okay? Simple fundamentals, simple basics. And this is the part that determines whether or not you're a winning trader overall. Because it doesn't matter if you're using the Walmart lines, which is basically the Walmart lines are just the two sweet spot goal lines that happen to be on the either side of where price opens. And you can see right here, here's a great case. I mean, if you went long there, you got stopped out. If you went short there, you got stopped out. That happens. It just happens. But look what happened the hour before. You made money short, you made money long. The hour before that, money short, money long. The hour before that, money long, money short. The hour before that, money long, money short, right? And so on. And who knows, maybe this hour, it's only, 25 minutes into the hour or so. There still might be a chance to make money long or short. The range is pretty small at the moment. You got a range of 12 pips. Look at this, the one before 46, 34, 30, and 35. And chances are this sucker might pop. Or if it does stay somewhere around this 12 or less than the 20 number, um, the next hour it might explode. So you just have to wait and see. And you can see right here how price is boxing in this area between the 60 and the 50. So we'll just see what happens. But, really, there's no need for a squiggly line here. And the thing about this is what makes it so tough for traders because one, all the stuff they've learned in the past, all those indicators, MACD, RSI, stochastics, Bollinger Bands, all the Fibonacci's and all this and all of that. It just makes it so difficult. It's like in their minds, how can you possibly trade just looking at a couple of horizontal lines and taking the trade with the H1 candle color? It has to be more complex than that. But there's just certain realities. Price goes up and down. And once you put the trade on, it's up to the market. It's not up to you. It's up to you to take profit if and when you can. And it's up to you to make sure you don't lose any more on any one particular trade than you're willing to lose. So you stop out if it goes against you. And that's trading. That's the essence of trading. All that other stuff is fluff, really. I mean, I put a RSI indicator on the bottom. What's it going to do for me? Or MACD stochastics, or any of those other indicators. What's a moving average going to do for me? I mean, you can tell me all the things about price reverts to the mean. I understand that. I used to trade that. You can tell me about divergence. You can tell me about almost anything. Most of the methods out there I've tried, but what have I wound up at? Horizontal lines, because I got rid of all the extraneous. I run the statistics. I know they're in my favor. So when I'm trading well, I follow the simple trades. Either an H1 breakout, previous H1 breakout right here, the Walmart line, or a buy zone type trade on the hour. But, you know, the trading's going to happen somewhere between this line and this line. Long, short. That's it. Do I win every trade? No. But if I take the signals and I employ risk management and I, have my precise entries, I don't miss them or I don't rush them or I don't get in late, then things work out in my favor. And the beauty of this is you could basically, you see where price is, you could set your trades as pending orders and you can sit back. When your order gets filled, then all you have to do is try and take profit, because if you have a pending order, you can set your stop loss ahead of time. So as soon as the order triggers, your stop loss is in place. So all you have to do now is take profit if the market gives you a chance. That's it. There's nothing to figure out. You know where you're going long, you know where you're going short. But once again, learning is changing. And many of you have been taught differently. And you're reluctant to give up some indicator. You just feel that urge to put it on the chart. The question is why? Is it going to increase the probability of the price moving across this line or across that line? No, it's not. And maybe that's what you really need to understand and hear, is that the indicator is not going to change anything that happens here. This is where the action is, not down here in some lower sub window indicator, or not on some other squiggly line that's running through your chart or trend lines or whatever. No, the action is right here. Does it cross this line or not? Does it cross that line or not? Does it move across a particular price that you set? Doesn't have to be these lines, it could be something else, but that's it. That's the essence of trading. So, fellow traders, I hope that helps you. And just remember, you see, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.